or communication. And so it's harder to install. It's more expensive to install. Once you're in, you're less likely to leave. So strong competitive moat.
There's been more noise and money made by Palantir over the last year, and it's time to figure out if this thing is the real deal, and if so, is its present projected potential future value per share worth what Cathie Wood and other YouTubers think it is? Welcome to MGA Investing. My name is Dee. I'm not a get in on the ground floor type of investor. I generally like companies with a track record to compare past performance to get a gauge on their ability to set and meet forecasted projections. I try to minimize my willingness to speculate and instead rely on what actually can be observed. My portfolio is not totally void of some higher risk growth stocks, however. I hold Teladoc and Beyond Meat. I treat them as I did my purchase of Tesla shares back when I bought them in 2015. I believe that if either of these companies are successful, their products could have a dramatic and needed positive experience for humanity. I would categorize both companies of embarking on transformative products or services. And if they're successful, they'll become disruptive. So as a personal choice, I was willing to color outside the lines a little and reallocate a percentage of my assets to invest in what I believe to be the future of these companies and their products. And then I filter that through the dumb method. You know, I just don't believe in having a portfolio full of unicorns and hoping for the best. I do much rather rely on a process of stock analysis that can deliver more consistent decision making and positive long-term stock portfolio results. I'm referring to the dumb method, an easy to replicate and reliable method for analyzing a stock investment without the need for sophisticated math and spreadsheet skills or stock analysis software, a process I've used successfully for more than 2 decades. It was Cathie Wood and her ARK investment that really put Palantir on the map during the heat of the tech market surge in 2021. The company's shares skyrocketed on the tech wave like so many others just like it. But just because Cathie Wood says it's good and then YouTubers pipe in doesn't make it a great investment. In this first video, part 1 of a 4-part Palantir comprehensive stock analysis, my objective is to determine if Palantir is worth the investment or just a hyped up pump and dump full of hot air. One of the first criterion I use to determine a company's value is to determine if it has a durable competitive advantage. Think of it as a moat protecting the castle. In this video, I'll take you through the steps I use to determine if Palantir has a moat and why that is essential for the possibility of a company to deliver larger future rates of return. All throughout human history, the empire with the most military capabilities ruled. The Greeks had heavy shields and bronze corselets and superior war strategy. Romans had fighting formations fortified by weapons and armor of steel. Napoleon had masterful battle strategy, cannons, and smaller quick battalions that could move at a moment's notice. The British commanded the seas, the US air superiority, and the nuke. Each progression of the war machine perfected the ability to kill at a distance. Each empire that embraced the newest war technology that allowed them to kill at a greater distance had the military advantage. Everyone else found themselves colonized. In this century, what is shaping up as a new technology of killing at a distance is cyber warfare, with physically destructive weapons, media disinformation campaigns designed to instigate self-fragmentation within a country. Cyber is the ultimate reconnaissance and first strike weapon in an enemy's ability to strike at a distance in both war and business. As I researched more about Palantir, I started to wonder, is this vaporware, or could Palantir be the Boeing, Lockheed, and McDonnell Douglas of the 21st century, ushering in the next advancement in killing at a distance, all wrapped up in one single company? Well, I'm kind of getting ahead of myself. Palantir Technologies was founded in 2003 to build software for use in counterterrorism operations. In addition, it also builds enterprise data platforms to be used by organizations with complex and sensitive data environments. It's important to make a clear distinction of what Palantir is and is not. It is an analytical infrastructure. It is not a visualization tool or database. Its superpower is its ability to help analysts, both technical and non-technical, leverage existing data within an organization to quickly find answers. In 2008, it released its first platform called Gotham for the intelligence sector. Gotham enables users to identify patterns deep within data sets, ranging from signal intelligence sources to reports from confidential informants. It has the ability to take all these previously disconnected points from different sources and connect the dots to reveal a narrative. U.S. defense agencies began using Gotham to investigate potential threats caused by IEDs. The program is now used widely by the United States and its allies. In 2016, the company released its second product, Foundry, which is used by leading companies across industries, including companies within the energy, transportation, financial services, and healthcare sectors. It's fast becoming a central operating system for both individual institutions and industries. A good example of this is the Palantir Airbus partnership that began in 2017, which is now expanded into a platform for the aviation industry that connects data from more than 100 airlines and 9,000 aircraft around the world. Palantir's Foundry platform transformed the way organizations run by creating a central operating system for their data that is designed to scale with increasing complexity, meaning it will be able to support these companies as they grow while powering data-driven decision-making from the outset. Foundry is offered as fully managed SaaS and provides an end-to-end platform that spans from cloud hosting and data integration to flexible analytics, visualization, model building, operational decision-making, and decision capture. Here's the thing. Have you ever watched the science fiction TV drama Person of Interest? That was an illustration of AI-connected technology that is able to quickly and accurately process mountains of data and connect the relevant and related dots. Having these capabilities as part of a single platform eliminates friction and protects against the loss of data history, security, and privacy as users analyze data across siloed technologies. Palantir's software is designed to aggregate disparate and siloed data sources to enable the best possible data-driven decision-making. The D in the dumb method represents durable competitive advantage, or DCA, as I would refer to it for the remaining of this video. As I mentioned earlier, a good visual of what a DCA is to imagine a moat around a castle to protect the castle. Now, in the case of business, that defensible moat could be patents, proprietary processes, regional regulatory advantages, various network effects or switching costs, cost advantages, economies of scale that allow a company to fend off competitors and sustain profitability. The benefit of a DCA is that it provides a company a defensible position that increases their odds to gain significant market share against competitors, which could potentially translate into higher growth for the company and higher returns for shareholders. I use Porter's 5 forces to help me determine the relative strength of a company's durable competitive advantage. Familiar examples of companies with a durable competitive advantage would be Apple with its ecosystem, Google Search, Nike shoes and athletic wear, Tesla EVs, Coke soft drinks. Sometimes companies like these have multiple points of a durable competitive advantage. Porter's 5 Forces, created by Harvard Business School professor Michael Porter, was published in 1979 to help analyze the attractiveness and potential profitability of a company. It identified 5 forces that make up a competitive environment: competitive rivalry, threat of new entrant, threat of substitution, supplier power, and buyer power. Now here's a look at how I use Porter's 5 forces. First, competitive rivalry, which looks at the number of competitors in a market and the strength of those competitors. And where there's more competition, eventually a race to the bottom ensues and prices and margins fall quickly, which is not good for long-term profitability of the company or my rate of return on my investment. As it relates to competitive rivalry, I don't need to know the actual total number of competitors, but rather what I'm trying to do is get a sense of who the big players are in this space and how much of a challenge that they can pose to Palantir's possible durable competitive advantage. There are several big players in this market. There's Alteryx, a provision end-to-end data science and analytics platform for enterprises. Their products are used for data science and analytics. Databricks, a cloud-based data engineering tool used for processing and transforming massive quantities of data and exploring the data through machine learning models. It was founded back in 2013. Then there's Variant, a company that provides solutions for enterprise workforce optimization and security intelligence. They've been around since 1990. Then there's Tyler Technologies, provides integrated information management solutions and services for the public sector with a focus on local governments. The oldest of the bunch, they've been around since 1966. Cognizant, a provider of information technology consulting and business process outsourcing services. They've been around since 1994. They're the biggest fish in the lake. And then there's Sigma, a company that offers data analytics services and develops decision support tools and software. They've been around since 2004. Tableau Software, a company developing business intelligence and analytics software. They've been around since 2004. Splunk, a company developing a machine data platform that comprises indexing, search, reporting, analysis, alerting, monitoring, and data management capabilities. Another competitive factor to consider will be internal IT departments building their own in-house software development projects, and new and different sources of competition that arise as a result of various technological breakthroughs. Speaking to the product or services differences in the quality or anything else, Palantir, based on my initial research, does appear to do a noticeably better job connecting technologies, data, humans, and environments. Its current ideal clients reside in the capital markets. They deal deal with crisis response, defense, financial compliance, insider threat intelligence, and legal intelligence for its Foundry software platform. It enables an extensive data analysis which can't be done on a PC or on-premise servers due to the computational effort expended. Gotham, on the other hand, as stated earlier, is primarily used by government agencies looking for potential human threats hiding in complex networks such as terrorist cells, trafficking rings, money laundering schemes, vectors of foodborne illnesses, etc. Organizations that use Gotham do so to merge their data and systems, then map that data to a common model that can then be modeled and analyzed in the same place. Most specialists dealing at this level admit that Gotham is the best platform on the market for investigative analysis. What truly differentiates Palantir in this arena is not just the sheer number of patents it owns, some 1,500 plus, nearly double what most competitors, but also the fact that its analytical infrastructure contains 4 major layers of functionality. The first layer is data integration. Data integration is what really sets Palantir apart. It's the very foundation of its functionality. It retrieves all data, video, GPS imagery, spreadsheets, etc., existing within an enterprise located in different databases and puts it all into one place to access. Search and discovery, a second layer is a single point of access for search across any database in an enterprise. It can perform very advanced conceptual and persistent searches of petabytes of data without the use of SQL queries or the need to write strings. It enhances discovery of the unknowns by allowing the analyst, technical or non-technical, to search even on the basis of differentiation of information and how it's linked together. Regarding knowledge management, it can track to exactly how and when the information was entered into Palantir's platform. It can control user access and also manage privileges. With the collaboration layer, individuals and groups can benefit from one another's work through a collaborative process, while at the same time, Palantir manages each user's access to only the data they have authorization to access. As it relates to switching costs, the cost would be high for clients to move from one competitor to another. The size of the data sets being worked on are enormous. One thing to keep in mind is that some of these early contractual agreements that Palantir has signed with governments and companies aren't necessarily written in stone. Companies can decide to move out of those contracts with less than 12 months notice, as written into many of their clients' contractual agreements. And I'll talk a little bit more about that in the upcoming part 2 of this 4-part Palantir comprehensive stock analysis. For customer loyalty, well, with Gotham's Palantir, it's locking in its deals with countries. So building switching costs is also, you build in that customer loyalty because people tend to defend the thing they already know and paid for. Let's go back and take a look at the threat of new entrants. This is about how easy it is for competitors to enter the market, for example, cost of entry and regulatory constraints. Here's where we're looking at time and cost of new entry and specialist knowledge. In terms of time and cost of entry, unless you are in an existing player or bring some patented technological advantage, this is a difficult business to enter with extremely long lead to close times that can take years to close, making it cost prohibitive for new entrants. Several players in this space may have to actually merge to consolidate and concentrate resources in order to compete effectively with Palantir, especially in the government markets. The other factor being specialist knowledge. All the companies listed, as I was discussing, were U.S. headquarter companies. Each of these companies are fighting for a smaller pool of available technical and engineering talent to develop their businesses, which drives up one of the largest operational expenses for most businesses, and that is labor. Let's look at the threat of substitution. This is about how easy it is for your customers to substitute your product or service with a better or cheaper solution. Some of these customers at this level aren't looking necessarily for the cheapest, but they are looking for a better solution that allows them to derive better decisions more quickly from all the data from the organization's segregated parts. Switching costs play a big part here, but the fact that Palantir has many multi-year contracts with flexible early exit clauses without penalty increases the chances of better, cheaper solutions as an alternative in the future, especially if it can't deliver to its promise, and so far, they've been able to deliver. For supplier power, there are 2 questions. How easy is it for your suppliers to raise prices, and how many suppliers do you have? Because Palantir is a software platform development company. Supplier power is not much of a factor here. The one issue that could be seen as a possible supply problem is the supply of available data engineering and technology talent, as I discussed before. The demand to hire from a limited talent pool will eventually drive up labor costs. A look on their careers link on their website will give you an indication of the challenges they are already experiencing with hiring talent. Not to mention, they're competing for that talent against companies far larger and with much much greater resources. Buyer power. This is about how easy it is for your buyers, clients to really dictate your pricing. This is a soft spot for Palantir right now until they can fully execute their business building model of acquire, expand, and scale. In the acquisition stage, or phase one, which is where they are with many of their clients right now, is to pull clients onto the platform. It has to give up a lot of revenue up front or utilize investment agreements that involve the deferred potential revenue source. Once the client is in, Palantir works to move the client to phase two, the expand phase. Here, Palantir seeks to understand the unique challenges faced by the client to ensure Palantir software delivers as promised. The third and final phase, phase three, is scale. In this stage, the client account has matured and Palantir's investment cost relative to its revenue generally decreases and the value of the software platform increases as the client uses it more and becomes more widely used in the company's organization. As more users use it, more users become more self-sufficient, which in turn reduces Palantir's client system support costs over time. So in short, the buyer has more power in the acquisition phase, which has a significant downward impact on revenue, and investors will have to be willing to incubate Palantir, just as it was done with Amazon and Tesla. As I mentioned earlier, the benefit of a durable competitive advantage is that it provides the company a better defensible position, which increases the odds of the company to maintain and gain significant market share against competitors, which can potentially translate into higher rates of returns for shareholders. So after reviewing Palantir through the lens of Porter's 5 forces, I would say that Palantir has started forming a fairly strong DCA element with the government segment with Gotham and is now starting to make a dent with Foundry. If you can remember, I said that DCAs, durable competitive advantages, can be formed around patents, proprietary processes, regional regulatory advantages, various network effects, switching costs, advantages, and economies of scale. Palantir owns over 1,500 plus unique patents, and with those patents, they're beginning to own 2 of 3 networking effects. The first is data network effect, as it gains a competitive advantage through its 4 layers of functionality, collaboration, knowledge management, search and discovery, and data integration. And number 2, a platform network effect, because as the company builds on its DCA, its durable competitive advantage, users further engage the Palantir ecosystem. I currently place Palantir's DCA at 6.5 out of a possible 10, and that is mainly because they're still relatively early in many of the contracts they've already signed. Their 4 layers of functionality is a tremendous differentiator and it's certainly transformative. I'll have to see how entrenched they can get in the government and company markets before pronouncing that is actually disruptive. What are your thoughts? Why do you think I should rate Palantir higher in its durable competitive advantage? Or conversely, why should their DCA score be lower? In the next video, part 2 of this 4-part comprehensive stock analysis of Palantir using the dumb method, I'll explore the U in the dumb method, which represents understanding. That is, understanding how it makes money. Because if we can understand how a company makes money, we can make sense of the company's possible long-term revenue prospects. If you found value in this video, click that thumbs up and subscribe so you can be the first to be notified of the release of part 2 of this 4-part Palantir comprehensive stock analysis, the most comprehensive stock analysis on Palantir on YouTube. Thanks for watching. I'll catch you in the next video in this series.